It is one of the most common retirement investment options offered by employers in the U.S. today, the 401k. And it's really not surprising, seeing as they both give employers and employees a flexible way to save for retirement. But that doesn't mean there aren't risks or possible pitfalls. So Cory Sickles, president of Safe Harbor Retirement Group, here to help us avoid them. So good to have you back, Cory.
Glad to be here, Robin.
All right, 401k has been around for more than 40 years, first of all. So is it really still one of the best ways to save for retirement?
You know, if you really go back, and you mentioned 40 years, but, you know, companies used to have pension plans. So
right.
they've done a good job of basically taking the burden off them and really putting it on us, the individual. So of course, 401k plans, or whether it's depending on where you work, 403b or thrift savings or whatever that is. But it's really, that is your retirement.
Right.
So one of the things that you really need to be able to do is we'll talk about, you being able to maximize all that, but that is your retirement savings. You know, the other one might be Social Security, and, for our age, is really what we might end up, getting at that point in time.
Right. That's what we talk a lot about, is not really relying on that anymore.
That's correct.
Yeah.
So you really got to, it is going to be, the 401k is your retirement savings, and you really need to be able to take advantage of it.
All right, you mentioned the first pitfall we're going to talk about, which is maxing those contributions, right?
That's correct. One thing I firmly believe in is you need to take control. And we'll talk a little bit about that in a few seconds, but you need to take advantage of if they're giving you a match.
Right.
If they're gonna give you a match of 3%, and let's just say you make $100,000, that's $3,000 they're giving you. And if you're not taking advantage of that, you're really making less money. Think of it, you really need to think of it that way.
Right, it's free money.
It's free money.
Yeah.
So you really need to be able to take advantage of that contribution max that they are providing you.
And the other one, you're saying it's really up to us. So it's up to us to be proactive, and it's also up to us to maybe be a little more patient with things.
Correct.
So what do we need to know about managing it?
It's just like anything else. You do need patience. The market's going to go up and down, and right now we have a lot of volatility in the market. So one of the things you really can't be doing all the time is going in and buying and selling, or, I want to back off now because of the market correction or anything like that. You need to be patient, because the one thing you don't want to do is you don't want to actually buy high and sell low.
Right.
So, it depends on your age, right? But, if you're in your 50s, you have time probably before you're going to retire, and the best thing to really do is to keep it where it is, whatever funds that you're invested into, because as you're contributing also, month in, month out, you're also buying at a lower rate at that point in time as well.
Okay, so be patient for sure. Okay, another pitfall is withdrawing funds too soon. Why do people do that?
Well, it usually has some type of financial issue. Maybe you've lost a job, or you're in between jobs, or maybe you're spending too much, you're living outside of your budget. But by taking money out of your 401k in order to satisfy something now, you're going to lose all that potential growth, even if it's $5,000, $10,000, $20,000.
Right.
So one of the worst things you really can do is take money out of your 401k, and you should try to find other ways to be able to satisfy that, that monetary need.
A lot of people switch jobs through their lives. This is where the last pitfall comes in.
Yep. So the last one is I'm a firm believer in taking control. What I mean by that is if you leave an employer, that's your opportunity to go out and invest it the way that you really want to invest it. And the best way to do that is roll it over into your own personal IRA. Some people will roll it into the next company's IRA. I don't agree with that. And we've all worked for a corporation, and one day you're with a company A, right? Mm-hmm. And here's the 10 or 15 funds you can choose from. Then you actually leave, where they'll replace it with a new company, and here's another 10 or 15 funds that you're going to be able to choose from.
Right.
You're limited on what you can invest. So if you take control of it, take that. When you can, take it out of that 401k or roll it over into your own personal, then you can control where you're going to invest it. And it doesn't matter, whether the company changes 401k plans or anything like that.
Okay, all right. We don't have time to talk about the fourth one, but it's know your fees, so you should be able to get that one pretty obviously. And you're offering a complimentary 401k meeting to go over this with folks.
Yes. So if you do come into our office, all you have to really do is bring your statements. We can do an analysis of it, find out what type of fees you're paying, and that's one thing we didn't really talk about, but fees can be unknown in that. But the main thing is we can also do an analysis. How's your 401k doing? Do you need to be able to switch some things around? So we can sit down with you, go over that. Again, it's complimentary, no obligations.
All right. It is Safe Harbor Retirement Group. Great advice as always, Cory.
Thank you.